Hey everybody, JJ here. You're watching Bull Boom Bear Bust. It is Monday, February 3rd. Thank you to everyone joining us today on this episode. Today we're going to talk about this ongoing crisis that's happening, and no, it may not look like a crisis from the naked eye, but when you look at what's happening with the banking system, the fact that they have to come to a daily rescue of these banks, of these too big to fail banks, for anyone that's paying attention, it should be pretty easy to see that some not so good things are happening behind the scenes. And of course, the news, they're not going to talk about that. You might get a snippet of it here and there if you watch a financial channel, but generally it's not in even a financial segment of your local news program, or even the national news for that matter. But considering that the banking system globally is pretty similar, meaning that it's based on a fiat currency and that money can be lent even though it doesn't exist, it actually is issued and money is created when it's lent. Debt continues to accumulate across the globe, and in many places, even though the economy is slowing down, the real economy, you're still seeing rapidly rising prices. So we're going to talk about first a famous palace in Italy that has now become a homeless shelter. That's right, a homeless shelter, from a palace to a homeless shelter. We're going to talk about the Black Swan event, or what many call the Black Swan event unfolding. Has it now been contained? Are we out of the woods on that? That's the coronavirus. And we're going to talk about car sales globally and here in the United States to paint a picture on where things are really at. So let's get started. The latest on the coronavirus, the death toll now globally at 362. So as we can see, this did not snowball into a mass, essentially an extinction event is what some people were calling it. Now, we're definitely not out of the woods yet. It's still early. Is it going to be contained? Well, we'll have to see. So far, the reports of the virus here in the United States are very low, and that's a good thing. We'll just have to see where it goes. Now, the Dow Jones started the day big in the green, and we're still holding on to some of these gains. We're up about 0.5% right now. We'll just have to see where the day closes. This is a big day for the markets, because after the virus scare last week, we saw some big red days. So again, we'll have to monitor it, keep an eye on it. I think most of you by now know my opinion. It's going to be propped back up via the money printers behind the scenes, and we'll tune in on that one in a few episodes to see how that goes. Well, which country is taking the brunt of the activities that have been unfolding in the past year or two? Well, the trade war has already beat down China, and their growth was actually at a 30-year low, and that was just based on the tariffs and the slowdown in overall global economic activity. But now you add the virus scare on top of it, the slowdown and ceasing of exports out of China to certain countries, and that's going to have even a bigger impact. So what is China doing? I'll give you 3 seconds to guess. If you said cut rates and add stimulus, ding, 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 you would be correct. Don't get it wrong. That is the playbook globally when things begin to slow down. Mask it with lower rates so people can continue to borrow. Keep the banks liquefied. And here, this headline out of Reuters: China's central bank adds more liquidity, cuts 14-day reverse repo rate. So we can see the playbook here globally. It's lower and lower rates, easier monetary policies, loosen the guidelines on the lending, and in fact, they want to eliminate certain guidelines here in the United States. When you look at the debt-to-income ratios, that's still in the talks, believe it or not. And if I could sum up this overall playbook globally in 2 words, it would be more debt, right? Lower rates so people can borrow more and their payments will be lower. And more debt creates inflation. The more people borrow, the more people spend. The more credit that's issued, more people spend, and bidding up prices. We see home prices, even though sales have dropped, home prices continue to rise in most cities. And that, combined with a lot of other negative impacts on the economy, creates higher homelessness. Now let's go over to Italy real quick here. And this is an NBC article: 19th century Vatican Palace turns into homeless shelter at Pope Francis's behest. That's right. You can't make this type of stuff up, and I'm actually glad. I'm not glad there's homelessness to this level that this is needed, but as far as trying to help some people, I'd rather see a palace filled with homeless people than just sit empty while people are living on the streets or on the sidewalks or in tents, freezing cold and getting rained on. The four-story Palazzo Migliore was opened by Pope Francis in November 2019 as a refuge where up to 50 people could get food and shelter. It seems like with the four-story palace, they could get more than 50 people in there, but okay. And we'll link to this. We see a few people dining at one of these tables down here under the chandelier in the palace. And one of the homeless individuals living at the palace said the following, quote, "This place feels more like home. I have my own bedroom and bathroom." Mario Breza, age 53, said. He continues, "It's so different from the dormitories I have tried until now, where sometimes you feel like an animal in a crowded stable." So that's pretty interesting, especially considering here in the United States, Los Angeles, for example, people are paying $1,000 to live in a bunk bed, and they have a communal kitchen and a communal bathroom, and of course hardly any privacy where you have people below you or above you depending on your bunk position. So it's really too bad we couldn't turn more of these vacant buildings, especially a lot of these commercial buildings that are vacant, into homeless shelters. The problem is there's a lot of liability that goes along with that for the owners of the property. In this case, I really wish the state would just take over a lot of these vacant properties. There's a lot of vacant commercial buildings here in Southern California, and more of them popping up all the time across the United States. And again, it's just sad to see people living on the streets or in tents when we have all these vacant buildings that are unused. We even have banks, some of the too big to fail banks are holding on to foreclosures and not foreclosing in some case, just letting them, one, sit vacant, or two, letting the defaulted homeowners, quote unquote homeowners, still live in the home. And that adds to the housing shortage and adds to the problem. And we'll have to talk about that more in a later report here. Still on the topic of homelessness, the number of homeless students rises to new high, report says. And this latest report here found that 1.5 million public school students experience homelessness in the 2017-2018 school year, the highest in more than 12 years. So where does 12 years take us back to? Right before the housing bust in the mid to late 2000s. And if you watch this channel, you do see a pretty common trend here that a lot of the numbers that we look at that are all-time highs or the highest since prior to the financial crisis, we see that same time period pop up time and time again. That was the period right before the last financial crisis. Lastly, let's talk about global car sales, and we've been documenting this here at least the past year on the slowdown in auto sales. Now this is also global. It's not just here in the United States, and actually the United States is faring a little bit better than some of these other countries across the globe. And of course we know if they did not keep the banks operational, that car sales would have plunged off of a cliff by now. And this is out of MSN. The global auto industry plunged deeper into recession in 2019, with sales dropping more than 4% as car makers struggled to find buyers in China and India. The pain is likely to continue this year. So there we see China again popping up in these global economic statistics with the big slowdown over there. Now, if the United States was a net exporter, if manufacturing was the largest part of our economic system over here, then we would see a bigger slowdown here in the United States. But of course, we're a consumer nation. Only a small fraction of our total GDP is actually manufacturing. So the name of the game here is keep the banks liquefied, keep lending, keep people spending, and that's how they stop this from crashing. Now, how long they're going to let it happen or how long can they keep it going, nobody knows. But many people that are watching this very closely say that we are approaching a time when they can no longer hold it together. Now, it's my opinion that they could keep this going as long as they want to. What could they do? They could do mass debt forgiveness, continue to let banks lend even though the money doesn't exist in their coffers, continue to buy bad assets off of the books of the banks, and finally they could just deposit money into people's checking accounts like a Andrew Yang type of program, and that could keep this duct taped economy held together for who knows how long. Will they do all those measures that I just laid out there? I don't think so. All right, too many pieces of the puzzle would have to come together in just the right way for that to actually take place, and we know there's a lot of political divide in the country, so all those things being implemented together are very, very unlikely. So prepare for something big. In the meantime, I hope you're all well, staying out of debt. Let's finish up with the chart right here out of the U.S. vehicle sales. And this is a historical chart here going all the way back to the 70s. You can see these boom and bust cycles in auto sales. So let's go to the far right and let's zoom in on a 1-year chart. Here we go. Auto sales are not crashing. Many people out there are saying they're crashing. They're pretty volatile. They'll go up and down. But when you look, it's not a downtrend. Even at a 5-year chart here, you can see a slight downtrend if you look at the tops of these sales peak numbers. And we could be entering a downtrend, but so far we're not seeing the lower lows that give us that downtrend. So auto sales still hanging in there. Subprime lenders, who knows, maybe some of this repo cash is going to subprime lenders. From what we know out of the Fed, or from the Fed, it's 24 primary dealers that are getting the majority of the cash, and a lot of it is just what we have now is just speculation, because they're not being forthcoming on which one of the banks, or all the banks, but which ones are the biggest recipients of this bailout / repo cash. QE, not QE, but 2 words to always know how they're keeping this together: more debt. All right, everybody, thanks for watching, and we hope to see you here again soon on this channel. Bye for now.